Hey there, and thank you for joining us on the third episode of Stock Market 101 by CM Tribe Learn. In the previous lesson, we explored the basic principles of stock investing, how stocks are analyzed, and how to select stocks to invest in, based on your investment goals. Please see the description below for the link to episode 2. At the end of this video, you'll know about the popular stock investment strategies, how to diversify your stock portfolio, and the basics of reading stock chart patterns. Remember to subscribe to the CM Tribe channel to stay up to date on our latest lessons. Let's get to it. One of the best things about stock investing strategies is that they are flexible. If you choose one and it doesn't suit your investment goals, you can always tweak your approach. Let's take a look at a few of them. As the name suggests, this strategy simply means you're buying stocks and holding them until they can significantly appreciate in value. This means you're not concerned with daily price changes, and are willing to maintain your investment for a very long time, sometimes decades. Buy and hold strategy is rooted in fundamental analysis. You need to be able to identify stocks that can stand the test of time. This means closely examining which companies you think will still be in business and going strong for the next couple of years. Look at this simple chart for Netflix stocks over the last 5 years. Notice how the market price has kept rising over the years. If you had bought Netflix shares back in 2016, at below $100 per share and held it, you could sell it today for almost $500. All without tracking daily prices, or any other additional effort on your end. That's the power of the buy and hold strategy. In this strategy, you're dividing up the total amount you want to invest, and spreading it over a given period. Cost averaging is useful in volatile markets. It lets you buy more shares when the stock price is low, and fewer shares when the price is high. Why does cost averaging work for stock investing? Let's say you have $5,000 to invest in ABC company stock. Instead of spending the $5,000 now to buy the stock at the current market price, you can spread it over 5 monthly payments of $1,000 each. That means, no matter the market price of the stock for that month, you're investing a fixed amount. In the first month, ABC company's stock price is $6.60 per share. And then changes over the next months. The investment amount is fixed. Now, look at the shares bought over that period, compared to if you had spent all that $5,000 in the first month. With cost averaging, you invested the same amount, but got a lower average price and obtained more shares. Momentum investing largely involves technical analysis. Here, investors look at the strength of recent price movements of the stock to determine when to buy or sell. The idea is to ride the momentum until the price changes direction again. Look at this chart for Facebook stocks. Here you'll notice the price starts to pick up. The momentum is building in an upward direction. But eventually, the price movement loses momentum and changes direction. If you are able to identify when the momentum starts building or slowing down during a price movement, then you know the best time to buy or sell the stock and make profit. Diversification is simply a method of balancing risk and profit in your investments. You've probably heard the saying, don't put all your eggs in one basket. In stock investing, this means don't invest all your money on stocks from the same industry. Instead, put your money in stocks that do not move in a uniform direction. Let's say you own stocks from companies in the tourism industry, like airline services and hotels. But then, the COVID-19 pandemic happened, and everyone was forced to stay home. These companies were out of business for that period, meaning the value of their stocks would have gone down drastically, and your investment would suffer greatly. But what if you also owned other unrelated stocks, like agriculture, ICT services, and utilities? These industries were hardly touched by the pandemic. Some of them even grew in value during the period. Because of this diversification, your investment will not be in a complete loss. These other stocks in your portfolio will absorb the losses from your tourism industry stocks, since they are not directly related. In this way, diversification works as an effective hedging strategy to spread the risk among multiple asset classes. If one category sustains losses, another category can offset it with its profits. Did you ever look at a stock chart and wonder how to make sense of it? You need to know how to read the charts if you want to be a successful stock investor. Charts simply tell a story about how that stock has performed over time, which in turn gives you an idea of how it will likely perform in the future. At its most basic level, a chart shows information about the price and volume of the stock over time. Investors use this information to determine potential buy and sell points. Just like a regular chart, we have our X and Y axis. The X axis represents time, while the Y axis represents price. And down here, we have the trading volume. Volume tells you how much was traded over a given period. You can choose from several time periods, whether in minutes, hours, days, months, or even years. Notice how the chart information changes based on which period you choose. There are three main things a chart tells you. 1. The trend. Is it an uptrend, a sideways trend, or a downtrend? 2. How much changes occur in the share price and volume? And 3. Will the trend continue in its current direction, or will it hit a reversal? This is where technical analysis comes in. In the next video, we'll look at types of stock chart patterns, support and resistance levels, most common technical analysis indicators, and Japanese candlestick charting. See you there. Missed a previous lesson? Check the description for links to previous videos. And don't forget to like and subscribe to this channel to stay up to date on our latest publications.